My name's David Hitt, and I am a real estate broker and mobile notary. And I am here with one of my favorites, Jason Hecht with Guaranteed Rate. And can you share with me what is the difference between a conventional loan versus FHA or VA?
So FHA and VA loans are what we call government lending. It's not that the government is loaning the borrower the money, but the government is either insuring or guaranteeing the repayment of those loans. Because of that, those loans are much less risky for a lender, and lenders can use looser guidelines when lending people money. Veterans Administration loans, which sometimes known as VA loans, are only usable by people who served in the military, but they require exactly zero money down. So obviously you can see how that could be a big advantage to someone trying to get into the home buying market. FHA loans allow for 3.5% down instead of a traditional 5, 10, or 20% down with a conventional loan. Additionally, FHA and VA loans might allow for lower credit scores, and they might also allow someone with a little bit less income to qualify for the monthly payment on that home. They're designed by nature to help people get financing. Conventional loans are what almost everybody in the country gets. They're loans that are backed by private institutions or Fannie Mae and Freddie Mac, which are government-private hybrids that are designed to buy conventional loans from mortgage lenders and banks.
And those are typically the FHA and VA need to be owner-occupied. Is that correct?
Absolutely. There are very, very rare exceptions to that rule. But FHA and VA loans are designed to help people get into a home to live in. They're not designed for a professional investor.
Okay, and then what about, what's the difference between a conventional and like a jumbo? How does the rate generally work, and what about the cost of getting each of those loans?
So the distinction between conventional and jumbo lending is simply one of size. A conventional or conforming loan is a loan that is sellable to Fannie Mae and Freddie Mac because it doesn't exceed the maximum amount that they will lend.
And the maximum amount in LA, the maximum amount that they will lend in Los Angeles, being a high value area, is?
It depends on whether the property is a 1, 2, 3, or 4 unit property.
Okay.
But in the Los Angeles County market, Fannie Mae or Freddie Mac will let you borrow up to $1,149,000 and change on a single family home or condo.
Okay.
But if you're buying a 4 unit property, that number can be as high as $2.1 million that you can borrow for a fourplex.
And that would still be conventional?
It would still be conventional. Anything that's too big for Fannie Mae or Freddie Mac to lend on, by its very nature, is considered a jumbo mortgage.
Okay, and so anything, if I'm buying a single family home that's $1 over, let's say it's $1,200,000. Let's just make it easy. How does the interest rate and the cost of the loan vary from jumbo to conventional?
So it's about how much the loan amount is, not the purchase price.
Okay.
So if someone is borrowing more than $1.149 million, the down payment requirements may be a little bit more stringent. The interest rate may or may not increase from a conforming loan to a jumbo loan. It's going to depend a lot on the parameters of the individual borrowing the money, what their credit score looks like, what type of income they have, and what their debt to income ratio is, which is how much of their monthly income goes to paying their mortgage and other debts. It's a good reason to see a professional and find out exactly what you're going to qualify for at different price points.
Yeah, I agree. I've seen from my own experience, it fluctuates. Sometimes the interest rate on a conventional is lower than a jumbo, and sometimes I've seen it higher, and which is very interesting to me. But the last 6 months to a year, it's kind of flipped around. So just because you're getting a higher loan higher than conventional rate doesn't necessarily mean you're going to have a higher interest rate. It could be a lower one depending on the market at the time, I would imagine. Is that correct?
Absolutely. The parameters of the loan can also come into play tremendously when you're going with a conforming loan amount or a jumbo loan amount.
Okay.
So, for example, if you're doing a jumbo loan, you're going to wind up putting 20% down. So even if the loan is cheaper in terms of interest rate, it may very well be tougher for somebody to make that increased down payment. A conforming loan is going to be a little bit more flexible in terms of what it's going to allow someone to put down.
Okay.